We got a lot to talk about.
Meta.
Mimi.
You're not UK. You're not British, man. It's not Meta. Meta.
But they have a cool accent. I want a British accent. That would be really nice. Welcome, everybody. We are on week 20.
20. We've done 20 of these things.
20. And hopefully we're less nervous and jittery as we do this. But we've got a lot to talk about. Let me show you what we got today.
Jittery because of all the caffeine I've drank.
I give Brian a caffeine when he shows up intentionally just so he's like, this is all exciting. This is great.
Give me more coffee.
So here's what we got. This week, we got a pay raise. It's $1. Got another pay raise.
And what he means by pay raise is we got more dividends.
We do. We get bigger dividends. More and bigger dividends. So here's the portfolio. We're up 613%. But we were looking at Zim. That's not what I wanted to show everybody. But we're going to actually go through a stock screener that we set up. And we're going to be taking a look at potential companies that we want to buy.
Potentially.
For month 38. And then we've got a couple other interesting things. There's MSN every once in a while comes out with these articles where I guess somebody wants to know whether or not they can retire. And I want to highlight some things about this article. We've got Trump ordering an end to federal funding for NPR and PBS.
Always. We can't stop talking about Trump. Sorry.
I'm a little sad about that. Sesame Street. I watched that when I was a kid.
I think he just got mad because they were paying, the government was paying to have Sesame Street in like third world countries.
So what?
Like,
Big Bird, man. It's a big bird.
it is a big yellow bird.
No more Big Bird. Maybe.
Snuffleupagus.
We're going to find out. Also, Mark Zuckerberg thinks that AI can replace actual people. I'm going to talk about that later. Because I got feelings about that, but he's got different feelings.
He's got big feels.
He's got big feelings.
I don't got big feelings. You got big feels.
I do. So we talked about quantitative tightening last fall. We've got some more evidence of that actually happening. We've got the Treasury Secretary Scott and Trump yelling at the Fed to lower rates because of what we had in the previous link. We've got more stuff about the housing market here, which is a mass sell-off happening. So it's not just Texas and Florida now. It's starting to hit other markets, including where we live in Michigan, starting to hit Detroit. We talked about this for a year and a half. It's actually happening.
And just like Trump, Tom cannot stop talking about the housing market because he is obsessed with home prices.
I like shopping for houses.
You do.
I
don't buy many houses, but you do like to shop.
If you ever go to Trillia and
shopper,
you see the blue ones are the new ones and the gray ones are the ones you've already looked at. I showed Brian a Japanese style house I was looking at, and he looks at the screen and they're all gray. Everything is gray. Like I've looked at every single house in the area.
You need a better hobby, man.
I like that hobby. It's a good hobby. So we got Nike. I guess they're still staying silent about their transgender youth study. I thought that was very fascinating, and it covers. We looked at Nike last summer, and we thought there was some conflict there with the whole Anheuser-Busch problem. We thought these guys were in that too. Here's some evidence that, oh, look, that was actually true. We'll talk about that later. We also had somebody want us to look at MSTR and MSTY stocks, and we had some issues with those stocks. We've got some articles relating to why we had issues with that. Now, this was almost 2 years ago, not quite, it was about a year and a half ago that they wanted us to look at that. And when we looked at that, we saw some red flags. I thought the red flags that we're seeing show up now in these two stocks were going to show up a year later, so like a half a year ago. Apparently, it took a little bit longer than that, but now we're starting to see that, and this is a red flag for anybody who owns those stocks about what might happen with them. We've got another one here.
And that's the dangers of predicting the future, is you're probably going to be wrong, or your timing's going to be off, or something, then people are going to call you on it. But the fact that you're right, within a decent framework, it validates, I believe, your position.
He says only mine, so like he's not sitting here. Brian's got nothing to do with Tom's opinions.
No, not when they're wrong.
Yeah, only when they're right.
Only when they're right. Like, we did good on that.
We did. It was great. It's like those Motley Fool articles you see when they say we made 8,000% on this one stock. They don't tell you that they bought 50 stocks and that's the only one that did well. So on that note, Office REIT suspends dividends to preserve cash for tenant build-outs. There is a paywall on this, but we have another article that talks about it. There was somebody that wanted us to look at their portfolio, and they had a bunch of ETFs. They had a bunch of options calls on those ETFs. And we've got another link on that where we want to talk about dividend traps a little bit later on in the show here. UPS, on this note, they're laying off 20,000 workers. We said that would probably happen when we bought the stock, and it is happening. How that'll affect the stock, we'll talk about that later.
And of course, when you employ 1 million people, 20,000 isn't a lot, but
it is in this area.
Yeah,
it's half the city,
but it's still a lot of people.
It is a lot of people. We always look at the very beginning of the show. We look at the portfolio, see how it's doing. We're up 613%.
Yay!
Yeah, and then you can see the little blip here when the terraformers started to come to a head.
Yeah.
It looks a little tiny little roller coaster. Didn't really do a lot.
But we are on the 2-year scale here, so it does.
Yeah, I can zoom
2 years.
Here we go, year to date. There you go. There's the blip.
It looks a little bigger.
Bigger roller coaster. We don't care about that stuff. Why don't we care about that stuff? Well, if you look at our stocks.
Because look at the year before and the year after it. So
It
still going up.
It doesn't affect us that much. So here's all our stocks.
Nobody, well, other than Intel, but it wasn't during that time. Nobody cut their dividend during that blip, so they still paid us.
Our best performer to date. Now, we've said the market has this ebb and flow to it, where every 6 months it goes, all your roller coaster goes up, and 6 months later it goes down. Some of that's based on earnings reports. Some of it's based on day traders and options. Some of it has to do with macroeconomics. For example, we had Merck as one of our best performers for a while, and at one point Johnson & Johnson was, and at one point Kimberly-Clark was. It just does it. If you go back to past episodes, past dividend monthly stock purchases, you'll see that we show that in those videos too. AT&T reached out to us. We are apparently going to have a call with one of their investor guys. Hopefully he's not going to threaten us.
We reached back out to them and see what they can do to set up a call with their investor relations guy.
That's really good timing, because we, as investors, when a stock does really good like this, we look at it as a potential sale.
And we're going to tell them that. We're going to potentially sell your stock.
Maybe not. So we'll have to see what they have to say. The biggest catch with AT&T is their subscribers are looking really good. Everything's looking good, except they have this Achilles heel, which has been their debt for the past 10 years. So we're going to be asking him some questions. We're going to see what he thinks about the future, and we'll do some evaluations. We'll be brutally honest, but right now, when you compare AT&T to their peers, there has to be a reason. If you're going to sell a stock or another company, you got to sell it to somebody, first of all. And then there has to be another business that you have to buy. So there's got to be really good justification.
And at our point, obviously somebody's going to buy it because it's kind of a hot stock right now.
Yep.
Because it is going up. People are buying it. And the big question for us then would be, what do we put that money into? And I think that's the bigger question. What are we going to put it into first before we even think about selling it?
Treasuries. CDs.
Treasury bills.
Boring stuff. Cop-out stocks. Those aren't even stocks. But cop-out stuff, because I think the market's going to correct.
We're going to hedge our portfolio with T-bills.
So the worst performer.
Gold.
We'll pull a Robert Kiyosaki. We're gonna buy silver and gold in Bitcoin.
Yeah.
And then
gold doubloons.
Devon is our worst performer. Devon is one that we're looking at potentially buying. They've got some financial issues. We've said that energy stocks are cyclical, and these guys were risky because at the time we bought them, we were paying a 9% dividend, at least as it showed. And they have been paying a 6%, 5-6%.
Now it's 3.
Now it's 3, yeah. So we're looking at them as a potential buy, but that's how we roll. We like beat up stocks. We like stocks that are doing well. Well, if you look at the portfolio and you say, well, you guys aren't really doing that great. If you look at your total gain loss, that's not true. Last year, we had a realized gains of $3,000, and the portfolio started with $30,000 total value. So we made 10% in just dividends and capital gains and just sales, like we sold Solventum. Most of those were long-term gains. So if you think about that, that is more than 10% of the value just in dividends. If we look at our dividends.
And really, in 3 years, that's the only one we sold, and that's the only one we did not buy.
Exactly. Yeah.
So that gives you an idea of how we invest. We invest for